Welcome guys, it's Alon here, and this is Acorn Productions. Thank you for tuning in. Welcome if it's your first time, and welcome back if it's not. You know what we do here. This is the weekly update. I want to say this one's gonna be a little bit sooner than it was last week on a Sunday. I didn't have time to do it on the weekend, but we've got a big video coming up at the end of the month, so I'll make it up to all of you guys. We're going to have a big rebalance. We're going to relook at everything, and I'll touch that later on in the video. But we've actually essentially come back a little bit from last week, guys. Nothing really crazy. Essentially, some of our performers that were, running ahead of the race, they just came back a little bit. They just slowed down. They were probably climbing a little bit too fast. There was a little bit of adjustment. Nothing to be worried about. We're actually having, I guess, our best month yet so far. If it keeps going, don't want to jinx it. But if we have a look here, we've got Coinbase, MicroStrategy's not doing as good as they were. Even some of the ARK funds dropping back a little bit. And just for fun, I think etoro has actually got a much nicer graph here. So this is a graph of our performance so far. Here was if you guys weren't here, I don't even know if I had, I had I think one follower back here. But essentially, we invested in FRB. That was a First Republic Bank, and the bank got shut down, and yeah, we learned that we got to be careful when we touch stuff that might rebound, because they might also shut, and go out of business. So we lost like 5% of our portfolio just overnight there. That was quite tragic, but I guess we had some other things cancel that out. But yeah, I don't know if it's exactly translating, because I think we're like over 10% up, but it's saying 5%. But either way, the graph looks good. Maybe it's a little bit delayed, I don't know. But let's start with Coinbase, guys. So over here, we've actually got a little bit of bad news with Coinbase. If we have a look here, the past 1 week does look a bit tragic, This is 1 day, sorry. But if you start to zoom out, 1 month, guys, you can see it just jumped up a little bit too fast. There was a little bit of a correction. We've got a 1 month chart here. Let's just draw a little bit of a line here with Coinbase. You can see that it's jumping up a little bit too far here. But if we just put a line through here, like just with your eye, what looks nice, it looks like we're fine, guys. And we've got a rebalance in about 10 days. And 10 days, let's go with the line, go with the trend. The trend is our friend. And guys, if it comes down a bit, it's been doing very well. Remember, 80% is the goal for the year for this. And essentially, it's done it in a month. So I've got nothing to complain there. I do want to say the news is a bit negative, but remember, guys, if we sold every time the news was bad, we'd be broke. We wouldn't be making any money. We actually want to sell the good news. And Coinbase, our position's going to get trimmed at the end of the month anyway, because it's blown up so much. But we might consider actually holding it, a little bit longer, wait for the good news. But I do see all of the stuff, like Coinbase, no fundamentals. If you guys didn't know, Coinbase might not even be profitable for a few more years. But this is a crypto chart of essentially the total market cap, guys. And, when you look at this chart, I see it going up. Even here, you see how it blew up in 2018 and it cooled off, and then it blew up again with the halvings, let's say. So we have a look here, 2021, 2018, we got a 3-year gap. Yeah, that's 2021, and where are we now? 2023. So 1 more year, we might have another peak. Of course, it's not going to be the gaps here. The peaks aren't going to make millionaires anymore like they did before. But there's a lot of growth in the whole industry of crypto that you might not see in real estate or stocks or other places, So yes, there's a lot of risk, but when you look at it, most of this is a BTC dominance chart. So what it means is how much of the total market is BTC. So here we have a look. If we look at it long term, back in the day, 2021, Bitcoin was 70% of all crypto, like most of it. Then we had an alt season, which means all the other, I guess, shittier coins that are less trustworthy have a go. So we've come down to 40%. And here, over the past 1 year, what it's telling us is people are like, what, we don't want those other coins. We want the king. We want Bitcoin. So you can see it fluctuating over the years, let's say between high 70% to 40%. But guys, it's floating around half most of the time, maybe even a little bit more of the crypto market. So what that's saying is, in the last year, crypto went from 1 trillion to 1.2 trillion. So we're saying extra 100 bill in Bitcoin. New money, that's what we're saying here. Not specifically, that's not exactly how market cap works, mathematically, but essentially there's more demand, guys. The demand is increasing, and it's been 10 years. Like, Bitcoin's been around for 10 years. It's not going anywhere. Other cryptos are just riding the wave, with the first wave being made by Bitcoin, a proof of concept, a proof of something that does work, a proof of, blockchain technology could be used in many, many ways to revolutionize society, even down to the way we vote, all being open and trustless, so there's so many possibilities with this, and I do think it's quite exciting. Now, I want to talk a little bit about the refinance. We've got a refinance coming at the end of the month. Now, essentially, guys, the way this portfolio works is in 2-month intervals. So, July, these 2 months have been a very good 2 months. I was actually kind of setting up the portfolio at the start here, but no excuses, guys. But essentially every 2 months, we're going to rebalance the portfolio. Remember, we've got all those different sections of the portfolio. We've got the horns. I'll show you here. I'm eventually going to change it. But remember, we've got the chest. That's most of it. It's our ETFs, the safe stuff, buying the market, that's just to hold and keep growing our wealth. And we diversify it over different ETFs, maybe different continent, different countries. We're going to work on that as time goes on. And actually I want to make this portfolio with the community that invests in it, I want it to be this joint portfolio. Of course, performance comes first, but I think if we pull together our ideas, we might have a chance. We might have a chance of beating these fancy fund managers, Try something new, And then we got reserves. That's there to just take the risk away. And then we've got the horns, where we're trying to actually get our gains. So we're going to rebalance. So let's say, Coinbase, MicroStrategies, they're all doing good in the horns. So our horns are bigger. Let's say 25%. We want to take that 5% and we want to split it to the reserves and the chest. We want to spread the money. That's what it means. And we also want to look over these last 2 months and we want to think, what did we do that worked? If we have a look over the last 2 months, guys, we don't really have a lot to complain, I have to say. We only have essentially one losing position, which is bonds here, and we weren't expecting bonds to do anything but pay us a little bit of cash and hold their price, to be honest with you. Now, after we rebalance, the next thing we want to do, we actually want to reevaluate our positions, and we need to actually decide, do we want to keep these positions, or do we want to keep these positions at what percent, So we invested 6% into Coinbase. Now Coinbase is 10%. So are we going to keep that 6% of Coinbase, or maybe Coinbase at this new price of $100 and not 50 or whatever we bought it for? Maybe we don't want to buy it anymore, Maybe it's not the same decision as it was before. Maybe it's not as good as an opportunity as something else now because it's already rose. So we need to decide that, and maybe we need to put a new better opportunity in there that can continue to get us that growth, especially in the horns that are much more aggressive. In the reserves and in the ETFs, we're not really looking to trade or switch those that often, especially because of fees. You got to keep in mind, fees will just ruin you, especially if you're only making a few percent, so there's no way I would just sell QQQ just to, just the selling and buying would remove my few percent profit, it wouldn't be a good decision. But when it comes to other things and, they've done well and maybe there's better opportunities, then it's definitely something to consider, and also adding new things as well. And, maybe we're too exposed to US markets. Maybe we want to touch some overseas markets, and the ETF over time will strengthen each category to do more and more of its role. That'll be the goal. Now, the final thing to actually think about is how diversified do we want to be, guys? So at the moment, we don't have much in all of the horns, because when you think about it, let's say you have one good opportunity, like Coinbase. And then I also invested in MicroStrategies, and then I also invested in ETH. But if you look, Coinbase did the best. So Coinbase was the best decision. So technically, investing all in Coinbase would have generated 77, but MicroStrategy's got 45, this got less. But what I'm saying, every time you diversify, you also make it harder, because it's harder to pick something that works, let alone pick 3 things that work to the same degree. So, diversification keeps you rich, but buying stuff that work make you rich to start with, which is what we want to do. So especially with these horns where we're taking the risk, we don't want to diversify too far where we're losing those potential gains that we want to get. So it's a healthy balance. And we also don't want to have too little, that if we make a mistake, we're going to have an FRB all over again and take an immediate 5% hit to the portfolio. That's also something we're not looking to do. So with all that in mind, we're going to try, use a combination of tools that I guess have never really been, it's, I guess, the best time alive to be trading. We got stop losses, we got copy trading, we got social trading, we got the internet, we have all these resources. And, people are honestly, as the market, they're as stupid as ever. So, people are following their emotions and not using their brain. So it's genuinely a good time to be alive, a good time to be investing in the market, and a good time to make money. So I think we've got a big video next week. We're going to do a big rebalance. And if you guys are thinking that you want to copy me, the best time to copy me, guys, would be right after a rebalance. So now would actually be a bad time to copy, because what would happen is you would copy me now, and then the rebalance would happen, and I would be selling all these things that we've only held for a week. So you just paid fees to buy those shares. Now you're paying fees again to sell those shares, but you didn't see the upside like everyone else that held it for 2 months. So if you are watching this video and you are thinking that you do want to copy me soon, the best thing to do would just to be copying me after rebalance. So anytime there, or only copy new trades, that could be an option as well. Now guys, it's been a pleasure. I'll catch you next week, and I hope you have a wonderful day. If you stayed all the way to the end, I'm impressed. I didn't know anyone would, and all the best.